All right. Good morning, good evening, good afternoon. My name is Naveen Prithyani, senior trader at urbanforex.com and also head coach. Today we are going to be talking about a very interesting topic about divergence. Just before we started this webinar, we talked about divergence in a podcast. We talked about the theories of divergence, but we're going to spend this webinar going a little bit over theory going into practical. What does it mean? How does it look? And what does it represent? Okay, so consider what is divergence, how to use divergence, what are the divergence trading techniques and divergence trading strategy. Like all of this, we're going to go through all of that stuff. So this is the absolute best divergence trading techniques and strategies that we're going to be covering here. Okay, so before we begin, quick announcement that I want to make. We are opening the doors for the Black Friday promotions today. Okay, I'm going to give you more on that towards the end, so I want you to be tuned into that. If you're watching this webinar into the recording, below the video, in the chapters, you will see, if you want to go straight to the part where we talk about the Black Friday, you'll have it in the description below as well. So again, we'll talk about it towards the end. I want to really get into divergence right now. I want to cover as much as I can, and then I'll let you guys know about the Black Friday thing. A lot of you guys already got it because you guys were on the early bird specials. So congratulations on that. You guys have the best of the best of the best of the best deals. And then as we get into the Black Fridays and we open it up, the rest of you guys will have access to that starting right after this webinar, actually. So, and I'll explain to you how that works. Anyways, let's go straight into this right now. Okay, divergence. Let me open up the whiteboard. Divergence, before I can bring it to the charts, I want to show you something. What divergence is price versus indicators, okay? It's price versus indicators. That's what divergence is, okay? Without going into the terminologies and everything like that, I really want to show you something of, prices can move in a certain way. And then when they go crazy, what your divergence might be doing, let's say your MACD, they might be going up as well. You're following this rhythm of up and down. And then here, where things fly upside, your MACD or stochastics might be doing this. And it's like, huh? Why isn't that going up? Why is this price going up, but this going down? That's when we call it divergence. There is a divergence between what the price is doing and what the indicator is doing. The indicator is unable to keep up with the price. Okay? So one of the good techniques, as we talked about earlier in the podcast, is one of the good techniques that really gets people going to doing divergence well is this is an early warning sign of prices are going to turn. Okay, prices are going to turn. They're going out of balance. This is especially good in Forex rather than any other markets because Forex cannot travel in one specific direction for sustained periods of time. It follows a rhythm of a band that goes, of a movement that goes up, can come down, proceed up, and so on and so forth. It has that rhythm that it must follow, okay? Because you're dealing with two currencies fighting each other. It is not just one single stock and sky is the limit. There is no such thing as sky is the limit in Forex. If you get a trade going, it has a limited lifespan. Okay, so you have to remember that. Okay, so, and if you don't know that, we have episodes and webinars on that you can catch up on knowing your market. Know the market you're trading, and then you will have a better understanding of what to do. Okay, all right. So it's an early warning sign that the prices are going to turn and the prices need to come back to medium. Okay, whether that means prices need to come back to here or whether that means prices will tank afterwards. Whatever the case is, that's what a divergence sort of indicates. And it's so attractive to people because people can look at this and say, oh, when the divergence comes, if I can just get in here, 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 or here, that's great because I got a nice high price so I can sell it later. Isn't that the whole purpose of trading? Get a good price so you can sell it at a better profit later, right? So this is very appealing. This is very, very appealing. So, and we'll talk about how the appeal comes with a danger and a risk that people do not see. Okay. I've been doing divergence for years and years and years. So I will tell you about all the hidden dangers that come with divergence that we don't notice when we first see them. Because when we first see divergence, as explained to us beautifully on someone's YouTube video, it's like, oh man, I'm going to become rich in two days just doing this. There is some things you have to master it first. It is a good thing. Let's go deeper into it. Okay, so let's talk about this now. So divergence are early warning signs that tells you prices are going to reverse. Let's talk about the benefits of divergence. Okay, the benefits of divergence. Let me clean this up as well. And here we go. Okay, the benefits of divergence. Okay, one of the benefits of divergence is when prices are flying up like this, your focus gets shifted on trying to sell it. That's a great thing. That's a very, very good thing already to begin with. While the average public, what they do is, I didn't buy here, I didn't buy here, I didn't buy here, now I can't wait to buy it, right? It's sort of how the human mind works. Like, we just can't wait to buy a good deal once it's already gone, right? It's like everyone's buying it. I also want to buy it, you know. Then, unfortunately, they buy up in those horrible, horrible prices up in the sky. Okay? And then if you buy up there, you unfortunately need it to go even higher to make any money. But as human beings are good people, they're very hopeful. And that hopeful, unfortunately, backfires in trading. Hopeful meaning it went up, it should continue to go up. This is the human decency concept. They're hopeful that things will be okay. But in trading, it's not always going to be okay. You have to be more statistical and be a little bit more careful on that. Okay, so far so good? Everyone with me so far? So one of the benefits that we talk about is it helps you think better. Okay? When prices go up, you're not chasing it. In fact, you're thinking of possibly turning it. Okay? Now, let's move on a bit further. Now, one of the things, let's talk about some dangers. All right, well, you guys get the idea. I don't need to draw all this, but one of the dangers when it comes to trading divergence, okay, it's this. Okay, prices are hanging around. They start going up, and around here, okay, let's say your moving averages down here, or your MACD or RSI or stochastics are following the rhythm, and then towards the end, it starts to go down now, okay? It starts to go down now. So what we're gonna do, we'll turn this into a black color now. Prices start to move up, and this starts to move down. The danger is people think, that's my sell. I'm going to sell it right now. Prices continue. Divergence continues. I'm going to sell it right now. Prices continue. Divergence continues. Constant stop losses. In those constant stop losses, the human emotion takes over and says, I made a loss here. I'm going to trade bigger now. I made a loss there, but it's got to be here somewhere. I made a loss here, but it's got to be here somewhere. The human emotions literally takes over, unfortunately, because you have so much confidence on it's got to go down sometimes. And what the worst thing that can happen to that individual is 2 or 3 days later or some time later, it actually goes down, but the person's not in it. Okay, that can really mess with the confidence of an individual. Right? You guys had that experience before? You know, I get that time to time. You guys have had that experience, right? So it's not healthy to experience that, but it's the nature of the markets, unfortunately. Okay, another danger. So that's danger number one, that it's not ready yet. That's danger number one. Danger number two, prices start to go up. You have a little bit of down move and you have, oh, they're doing the opposite things. Looks like my markets are going to turn around. I can sell this. You hit the sell, prices go up a little bit more, stops you out, and your indicator starts to come back. Then you're like, What happened to my divergence? Where did it go? And it disappears. Okay, that's another danger. Okay, it's because the indicators are generally slow and they follow price. So that's another problem. So it all boils down to, how do I enter this well? How do I enter a divergence well? So now that you've understood a little bit about divergence, you can understand why it's so appealing to people that I can't wait to do this divergence trading strategy. I'm going to be rich beyond my wildest dreams. I'm going to buy helicopters covered in gold and platinum and silver. And my pilot is going to be a girl in a bikini. You know, right? Like, everyone goes crazy with their mindsets, right? And opposite, if you're a woman, then you might be like, well, I want my pilot to be a guy in tight shorts. Well, whatever the case is, it's very appealing because it looks like you're going to make a lot of money very fast, and it's so easy. A little bit. Okay, the answer is a little bit. Okay, it's easy, but anything that looks easy comes with a disclaimer, generally. Right? You guys know that by now. You guys are not kids anymore, right? If you're a kid and you're still falling for this, I get that. But as you cross the age of 20, 25, and higher than that, you can't be falling for stuff like that anymore. You got to be smarter than that. You need to investigate. It doesn't mean let go of the opportunity. Figure it out, dig deeper a little bit more and find out, is there more that I need to learn? And let's do that on divergence, because there is more. There is more to it. Let's take this into a chart, shall we? Okay, name your favorite indicator, RSI, stochastics, or MACD. Okay, RSI. Okay, a lot of you guys are saying RSI. All right, so let's plot in RSI. I'm going to click indicators. All right, RSI. Here we go. Okay, here we have the RSI. Okay, all right. Now, the whole concept of this is this portion right here. Okay, you see this downward flow, this low and this low. If I go down, I see this low, down. And I see that low. Oh, sorry. I see that low. Does that look similar? Price went down, indicator went down, right? Looks similar, doesn't it? Now, let's take it further. Then it goes down lower. Prices went down. And that low, I think my mouse is going nuts. We got down there. Okay, does that look similar? Yeah, but now we got a more down. But then over here, we don't have down. In fact, it's the opposite. It's the opposite. These are early warning signs of maybe prices can go up. Now, let me ask you this. When does the price go lower? At what point does the price go lower? Let's talk about the dangers now. At what point does the price go lower? Would you say starting on this candle, the price goes lower? And at that point, already your indicator's like, hey, I'm not lower though. So that is the first moment you feel the divergence is in progress, right? The first moment. But any buying activity there can be under threat. In fact, this can do this and still be a divergence and then do that. So can you guys spot the divergence? You guys can see it visually though, right? But can you guys feel how that can be very painful if anyone who buys early in these areas? So that's danger number one. That's danger number one. Danger number two is when he starts to come down lower and your indicator actually starts to come down lower too. And then it's like, oh, I guess it's no longer a divergence. Well, when did that happen? Okay. While in the meantime, the person takes multiple losses and then the divergence disappears. Okay, so what we're doing is we're opening up the trickiness of divergence. It's so beautiful in hindsight. It's so beautiful. And let me show you why it's so beautiful. So let me take it back a little bit. Okay, I want to show you this portion here. You see these highs? Let me do it like this. Okay, looks like a divergence. Would you say so? Right? Let me show you one more thing. You see this high that went higher? Is that a divergence? Good. That's not a divergence because that is identical. But did this high go higher than this high? On the price, it did, but on the indicator, it didn't. Okay, let me show you that properly. Prices went higher. On the indicator, from that very moment, prices went lower. The indicator went lower. So there's that vagueness as well. So when we look at things in hindsight, in the past, we're like, oh man, if I only saw this at that time, I would have done a sell right there and I would have closed it right here and I would have started calling the helicopter company and booking the golden helicopter, right? So divergence has that power, just like Fibonacci, just like support and resistance. It's got that power that says, look, it's a beautiful strategy. If you do this, you are going to be rich. But we're going to open up the evil side of divergence today. Okay? So I can make you a little bit more aware and a little bit more cautious because although it's easy to learn, the money doesn't come so easily. Hence why every person likes to use the sentence of money doesn't grow on trees, right? It's a very popular saying. People love saying that all the time. They like to throw it around. Money doesn't grow on trees, right? But if done well, you have access to money with trading, if done well. So the objective is to do it well. Look at this. Look at this one. Lower low here. Lower low missing. Divergence. Lower low again, but no lower low here. But the price does turn and it goes up. So it's telling you prices are, the divergence is telling you things are going to turn around. But if you start buying here, any of those buys, stop loss. You see? It can be frustrating as well. It's like, why isn't he going? Why isn't he going? When is he going to go? So the question always comes down to is how does this work? I know it does work, but how do I do this? Or is it an illusion? What do you guys think? All of you guys watching carefully, what do you guys think? Can it work, or is it an illusion that it works every now and then? Some of you guys saying illusion, some of you guys saying it can work, some saying I don't know. Okay, many of you guys are saying illusion now. Okay, so like many things, just simply doing one thing never will help you in trading. If you come in and you do this, you see that line, that's support, that's support, that's support. If support breaks, we're gonna sell. If you take your trading to such a simplistic methodology like that, it's not gonna work. I can tell you right now, save your money. The industry is going to be very expensive otherwise. It's going to be very expensive and a very, very long journey. Okay? So divergence is just like that. You need more pieces. Pieces like, why does the price move? Why does the price move? You must first get a grip on that. When does the price move? Can you guys tell me when prices move the most? Do they move when New York closes at 4:30 p.m., 5 p.m.? No. It is an illusion that the market is 24 hours, but that means nothing. 24-hour market means nothing. You need movement to make money. You're a trader. Okay? Your job is I'm in, I'm out. Thank you for the profits. For that, you need movement. No movement, no money. You can buy in here all you want, and tomorrow prices are up here. But if you close it here thinking it's not moving, it's not going to work. But what if you bought at the same price, but over here, things work? But how do I know to buy here? Time of day is very important. Very, very, very important. So when is based on time of day. Time of day or news? In between any of those things, it's not going to move. So that part you must solve. Okay, and that's not even an indicator, and that's not even a technique. It just means if you want to do a buy at middle of the night, midnight, when there's no markets are open, chances are it's not going to work, almost guaranteed. But if you come in the next day and you get closer to the Asian markets, or you get closer to the London markets, or you get closer to the New York markets, you'll get the move on. Okay, so time of day is important. Okay, you can't be trading in random hours just because things look good technically. All right, so moving it further. Now, how do we draw divergence? Are you guys aware of divergence? How to draw them well? I'll give you a little shortcut. Keep it simple without going crazy on the terminology. What we're looking for is the opposite. That's all we're looking for. Is we're looking for the opposite. Okay. If prices are going down, I like to take the lowest points. Whatever the lowest points are, I like to do that. And then I look at the bottoms for that same thing. If prices are going up, I like to use the upper side. If you want it simple, down, use the down, up, use the up. Easy peasy, right? This will help you get an idea of things are going out of control when there's a divergence, because a divergence job is to turn the market. Okay, so when a downtrend is no longer a downtrend on your indicator, the indicator is giving you early warning signs of this downtrend that you see here is not happening, it's going up instead. Warning, warning. Okay, this thing is due for a turn. Now, let's talk about, so you guys understood the when so far? Yeah, time of day or news events, that's when it's going to actually move. Let's go into, you guys learned how to draw. Okay, uptrend, use the upper side. Downtrend, use the lower side. Okay, simple. Keep it simple like that. And what you're looking for is the opposite to show up. Your price and indicator show you the opposite things. That'll give you early warning signs. Okay, what is divergence for? Is to give you early prices. Okay, that's what it's actually for. Now, shall we go deeper into it? How can this be used? How can we actually utilize this? There's a few tricks I'm going to teach you guys. One of the tricks is getting into the momentum of things, how things actually proceed, how things actually slow down, and so on and so forth. Okay, I'm going to teach you a concept called the rubber band man. Okay, now what the rubber band man is a momentum technique that I use to teach a lot of my students. Is sort of imagine there's a guy, okay, he's running in one direction, but there's a rubber band around his waist. Okay, so you can imagine he's running in one direction, but the rubber band keeps pulling him back. So in this case, the man is running towards this direction. He runs. The rubber band pulls him back a little bit. Okay, the rubber band pulls him back a little bit. Can you tell me how much pullback did he have? Is it 10%, 20%, 30%? 10%, right? What can you tell me about the power of the guy? Is he strong to hold the rubber band and saying, I'm going to keep going? Yeah, he's strong, right? All right. Then he runs. But this time, last time he ran 1 kilometer. This time he's running 0.2 kilometers. Is he running better than before? No, he's running less now. Okay, let's see how the rubber band pulls him back now. Whoa, look how much he's pulling him back. What does that mean for his strength? Is he strong? He's losing his momentum. He's losing his grip on the downward trend. But all along this time so far, as he's losing grip, your indicator and your price is saying, we're still good. We're still okay. Keep going. Keep going. No early warning signs yet that the rubber band man's going to lose his mind. He runs again. Okay, he makes his movement again. He runs 0.2 kilometers again, 0.2. He rests a little bit, 20%. Do we know anything about him yet? Nothing yet, right? Cool. Let him run again. He runs this time. What can you tell me about his energy and his power? He runs more than before. He's made a new low. He's beaten his old record. He's strong. What is the divergence telling you at the bottom? It's telling you a divergence is showing up. But the price is telling you that rubber band man, he's still got power. Stand by. The rubber band man takes a break. A very, very long break at this stage. Divergence continues to increase. We need to see what he's done since the last time he started running. Let's see what he's got. He tries again, rests a little bit more, tries again. Did he beat his own record? He couldn't beat his previous low. He rests 80% of what he did last time. And now he's come all the way back up where he started. What can you tell me about the rubber band man? Would you bet on him for running further at this point? Or would you say, I think he's finished? You put that together with divergence. You put that together with your divergence. You have your early warning signs, but a bit better. Okay? So that's one technique as a strategy. Okay? One technique. That is, a rubber band man will get you closer to the right time to get into the trade when you want to do this. So far, so good. A lot of people love the rubber band man. It helps them stay on top of things. Some people don't like the rubber band man because they're like, you know what? Why isn't a rubber band woman? Fair enough. Let's get rid of that rubber band man. I'm going to show you a different way of looking at it. Right? Let's do a different way of looking at it. What you need to see is if prices continue to make lower lows, you stand by. Okay? When the divergence starts kicking in, you then mark your lowest point that you see at that time, and you mark your last pivot high. You see how it was holding, and then it dropped? You mark that high. Okay, so far so good. Does that make sense so far? Whenever the divergence starts showing up, basically you start seeing it here. Okay, and you see a little turn happen here. You're like, okay, that little turn means this should be the bottom. That's the bottom. And he started here. The movement began here, and he came down and he paused right there. You take the last movement and you drag it out. You drag it out, 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 drag it out. You take the last low, you drag it out, drag it out, drag it out, drag it out, drag it out. You want to see the kill of this. If it makes a new low, stand by. Your divergence is not ready yet. But if you can break these highs, your divergence is now confirmed. Your divergence is now confirmed. It's telling you the cells just cannot do it anymore. For some people, they like to call this a double bottom. But a double bottom is so subjective. You guys know that? Let me explain why. How many of you guys, first of all, let me ask you guys this question. Do you guys all understand double bottom? Okay, many of you guys do know what a double bottom is. It's when prices come down, they pause, they go up, they come down, they pause, they go up. They're like, oh, one bottom, two bottom, double bottom. It means prices will reverse. That is a sign of reversal. Okay? But a double bottom, like Fibonacci, like divergence, like SNR, like anything in life, is so subjective. Here's why. And those of you guys who told me what a double bottom is, I want to ask you guys this thing. Ready? When this is a bottom, can you not accidentally mistake, is that my next bottom? Is that my next bottom? Is this my next bottom? Is that my next bottom? Is this my next bottom? Everything looks like that's my double bottom. That's my double bottom. That's my double bottom. And it's like, no, it's not. No, it's not. No, it's not. It's so scary. It's so scary that it's unknown. That's why if you want to keep it simple, take out that last ride that they made. Take out that last ride. Okay? Does that make sense? Is that clicking? I want you to get away from the subjectiveness of the markets and be more objective. Because every strategy is subjective. Doesn't matter how beautiful it looks from the front side, it's going to be subjective. So let me ask you this. Can you answer the concept of trading with a strategy? You cannot bring the world of trading into a strategy and says, and that's how you make money. It cannot happen. You need to learn how the market works, how to position yourself in the market, when should you exit a trade, and why is it moving to begin with? These are the elements that makes a trade, not a strategy. A strategy is me putting a piece of paper on top of this and saying, just follow my paper. It should solve what price is doing. It should. Look at the market using my filter, my strategy. Right? You guys, how many of you guys have been burned with strategies one after the other? I've tried this strategy. I've tried that strategy. I've tried this guru strategy, that guru strategy. You need to learn how to trade, not strategy after strategy after strategy. And where the guy will be screaming at the top of his lungs and saying, trust me, if this line breaks, only then you sell. We need an underside test to sell. Oh my God, shut up already. It's like, it doesn't work. It's so subjective. And I can promise you that. I can promise you that because I've done it. I've done all of them. The gray hair you see on this head, I've gone through every strategy that you can possibly consider leading up to the last 10 years in depth and lots of research behind it, lots and lots of research behind it. So I'm telling you, you got to be careful with this and don't take my word for it. Apply it and tell me, do you feel subjective? How many of you guys right now, without even going through too many strategies, feel, yeah, I do feel the sense of subjectiveness? You guys feel that? There is a sense of subjectiveness that every time I learn a strategy, the moment I make a loss, I'm always looking at my trade. I'm like, oh, you know what? Maybe this was the divergence here. No, maybe that was a divergence. No, that was a divergence. Okay, next time I'll look at this one. It's the same thing all the time, right? This feeling of, did I do it wrong? Maybe it's that time. It feels like an illusion that you're stuck in a circle, in this maze that you can't get out of. And it's a horrible feeling. Okay? Right? Well, you guys agree or no? So in this whole process, what we're trying to do is pull you out of the subjectiveness. Are these strategies and techniques bad? No. They're there for a reason. Is because statistically, they keep showing up. So they're there for a reason. But you need to be better at finding out that reason and saying, therefore, now I must trade. But it's not going to be as simple as, I drew a line, I drew a line, I drew a line, I can't draw a line anymore. That must be my trade. You don't want to do it like that. Okay? Okay. If you want to make the big bucks, they're not going to make it so easy for you. Okay? It's not going to be as simple as that. Okay? All right? So, but it's not hard. I trust me when I say it's not hard. Okay? If I can do it, anyone can do it. Like, and I'm not a very highly intellectual person, if you were to put it like that. It can be done and quite nicely, So shall we look at some more examples? All right, so let's take a look at this. All right, here we go. So you guys are gonna work with that rubber band man and the technique number 2. I'm gonna show you both techniques, okay? Both techniques. So let's start with the rubber band man, okay? So let's take this movement in this uptrend here. Okay, you guys all see this uptrend? Okay, from very quickly, everyone sees the uptrend, and very quickly, everyone sees the indicator sort of going up as well. Okay, real quick quiz for you guys. How am I supposed to draw this? Am I supposed to connect the bottom pieces or the upper pieces in an uptrend? Upper pieces. Excellent, excellent, excellent. Kudos to you. Okay, upper side things, I have to connect it. If I connect upper side here to here, does it match? It matches. So no opposite means no divergence. Stand by, stand by. If I connect it here to here, that part, does it match? He's 5'7", going for the heavyweight champion with a rubber band man around his waist, going up the hill. We'll call him Bob. Bob is on his way, running to the upside, and we are going to bet on Bob when Bob is tired. Otherwise, we will let Bob run, but what we're wanting is to Bob to let go of the power. So the moment the divergence started, what can you tell me about Bob? He went from here to here. He went super fast. How much of the super fastness did he rest? How much did he rest? 20%? 30%? 15? Okay, some of you guys saying 15, 20, yeah. So he's resting a little. That means when he ran up, the rubber band is pulling him back, but it can only manage to pull him back that much. He's strong. He's holding the power. After that, prices go up again, and he runs and he breaks his own record. When he goes higher, does the price and indicator also go higher? Yes. Divergence has disappeared. There is no divergence. The rubber band man kept you safe, saying, don't worry, not yet. Stand by. Prices go higher now. Okay, they're going up higher. Then, from this moment to this moment, the rubber band man makes a new high, and then on your bottom end, you're like, okay, down, 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 down. I don't have a new high. In fact, my high is not even higher than that. It looks like it's identical, doesn't it? While on the price, it's like, whoa, what is that upward incline? Looks opposite. I'm focusing on rubber band man is saying, I'm still running, but the divergence is starting to show up again saying, hey man, warning, 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 a sell might be coming. When the rubber band man ran from here to here, how much rest did he take? 10%? 5%? Would you say he's tired? He is not tired. Stand by for let him launch further. He runs again this time. Does he run further than last time? He has run further, but he's run less. That's a problem on its own. He's run less than before. He's run less than before. Now, how is his resting phase? He's resting so much that he's gone beyond where he ran from. What can you tell me about that rubber band man guy now? Is he kaput? From this moment onwards, if you now go with your divergence, the doors will be open for you with very less chances of getting stopped out now. What you've essentially done is you've used my cartoon character to help you with the momentum of the market flow slowing down and shifting to the sell side. And the divergence was telling you early on saying, a sell is coming, a sell is coming. And you use the cartoon character to say, aha, my sell is there, not before. Okay, now let's talk about method number 2. Method number 2. This was method number 1 for those of you guys who want the little fun, cute cartoon character, rubber band man. Let's go for the secondary object. Do we have higher high sequences coming into play every time, right? When your divergence showed up here, sorry, I didn't draw it straight. When your divergence shows up here, where prices, it's identically straight, but over here, it's going up. That doesn't look the same. In fact, that's the opposite. When prices showed up there, what you want to do is mark Each high that comes up, you're like, that's my highest point earlier. And this is where he began. This is where the buy began. You take it forward, you take it forward. Did the price make a new high? Yes, absolutely. He went higher here. If that is the case, get rid of everything and saying the new high started to pause here and he began from here. You extend that out. Did he make a new high? No. But did he make a new low? The upward flow is over. Do I have a double top here? No. But I have a lower high, which is a first early warning sign of a turn. But I don't want it to be subjective for you. That's why I'm putting you more on this side and saying, when you get to that spot and you had divergence before, now it's confirmed. Now it's confirmed. Don't waste your time trying to catch the top. You'll lose more money trying to catch the top. Is it clicking? Is it clicking? Okay. You know how I'm able to do all this stuff so easily and so, I can give you a cartoon character. I can give you anything. You know where this all comes from? It is not that I'm looking at the charts in a very unusual way and I was born like this. No. I understand what price is trying to do. I'm trying to give you that understanding of what price is trying to do in a way that will click and make sense for you rather than in a strategical way and saying, after 3 pushes up, you must sell. That's going to be subjective. Divergence is subjective. So we need to strengthen it a little bit with a proper understanding of the market. So what I just trained you on today is understanding a momentum shift. In a professional language, what you've done is you've faded the buyers. But no one cares about the professional language because I personally don't care. If you understand it, that is what I care about. But if I give you professional jargon and cram your head with vocabulary, then you've lost time. You've wasted time by coming to this webinar, and I've wasted time because none of you guys got it. What's the point, right? So I hope this technique, it makes sense for you guys. Yeah? Would you guys agree? Does it click a lot better? How many of you guys like the rubber band man? All right. The second method, using the concepts of the last movement up and boxing it out and saying if it goes above or below. How many of you guys like the second one? Okay, many of you guys saying both. Okay, so some people are more serious, like I don't want a cartoon on my screen. This is serious. This is money, baby. They opt for the second one. That's okay. I'm more playful, so I like to use a little cartoon character. Is that too bad? Comes to the same conclusion, right? All right, so now, as promised to you guys, now that you guys have a little bit more understanding, before I even open the doors for Black Friday for you guys, can I ask you guys one thing? Did you learn more in this webinar about divergence than previously? Good. That is the whole objective of this, is I don't want to get you hooked on, you know what, just learn divergence, you're going to be rich. I don't want you to do that. I want you to understand divergence is good. I want to be honest, it is good, but I also want to show you the dark side of divergence. And then when you know both, knowledge is power. When you know both, we can find a solution for it. That's what makes you a better trader. Okay? You got to know the holes in every good opportunity. Okay? You must know the holes. So whenever you find an opportunity, if you take the mantra of Urban Forex, is find the holes in the best opportunities that you find, and you will keep yourself safe. And you might even do the opportunity better. You might do the opportunity better. Right? All right. Now, okay, would you guys agree this is the best divergence trading strategy? You guys are too kind. You guys are too kind. All right, cool. Thank you. All right, now to talk about the Black Friday deals. What we're gonna do is what we have is the starting framework. Remember how we talked everything about today, that it's not really about the strategy that you must be good at. It's, do you understand the market? Can you pick up on the market's rhythm and understand, what should I do? What should I not do? How do I know if I look at any strategy, how am I supposed to respond? We have the Mastering Price Action 2.0 to lay the groundwork for you guys. It is an 8-week long program. It was initially intended for some of my premium VIP students, and I had built it back in the day for $6,000. And not too long ago, we changed our mission to make education a lot more affordable. As you guys probably already know, the way I teach, we have high VIP clientele. I don't really need to bring this knowledge out to the general public. There's absolutely no need. But due to the mission statement, for me to sleep better at night and for my management team to actually be like, we got to throw in some good karma. Otherwise, what's the point? What's the point of all this money? There's no point. So we've brought it down to $249. Okay, this 8-week long program where I go week after week. What do you need to learn? How do you need to do it? What exactly do you need to look for? Along with that, every week, every single day, what you have learned, you'll get live market examples about what you have just practiced. It's showing up in the practice training center every single day. Top that off with, you got around the clock support. You have a question, middle of the night, weekend, throw in an email, we're there for you. You'll get a response in 12 hours or 12 to 24 hours. Let me put it that way. Someone's going to get back to you with an answer. Top that off with a 30-day money back guarantee. Okay, you have absolutely nothing to lose, nothing to risk. It is a wonderful program, thousands and thousands of happy reviews. It is the iconic, I don't want to use the word iconic because that's the next program. It is the stepping stone of the entire industry, Okay, this is the best of the best that you're going to get. Okay, it's called the Mastering Price Action 2.0. It is available for the Black Friday special for 50% off. You'll be able to get it for less than $100. In fact, I believe it's less than even $90. So what you can do, you can pick it up on www.urbanforex.com/Black Friday. Those of you guys who are already students and you guys are waiting for, hey, how do I get onto the Iconic Trader program? Because I want to step it up a bit. I want to be one thing very clear, whether you're trying to get into the Iconic Trader program, the Elite Community, or the Unicorn Mentorship program, whatever these programs you're looking to get into, all of them have a limited seats available strictly because you guys know how we handle support. Support is a very big deal for us. And we cannot do support if we let in everybody. We can't handle it. The volume is too high. So I have one small request for you guys. An email will go out to you guys for you guys to join during the Black Friday. We always sell out during Black Friday. The demand is very, very high. The one request I make for you guys, if we do sell out, please do not be upset with the service team. If they can't get you in, they can't get you in. They can put you on a waiting list for if they can get you in within the next week or so. But we have to let in only a certain batch of people amount at a time. We have increased the number a little bit this time, but there we do have a finite number that we try to keep that barrier in so that way we are able to provide support in a more efficient manner. Otherwise, you just have a course with no help, and that's not valuable. Okay, so within 30 minutes, you guys will get emails for those of you guys who are already Urban Forex members. If you haven't already got your Black Friday offer for early birds, and for those of you guys who are here, again, you will have the Mastering Price Action 2.0. We would love for you to join the Urban Forex family, get you started on the right path. The pricing is very, very reasonable if you haven't already noticed it. We want to get you started off on the right foot. 8 weeks will pass by very quickly. Within those 8 weeks, we're going to do a webinar together that'll be just like this, where I'm going to go into more details behind closed doors, where I can speak more openly, more freely about certain things. Okay? So you have those benefits as a member as well. So looking forward to seeing many of you guys on there. Again, it's www.urbanforex.com/Black Friday. Okay? Let me put that into the chat for you guys one more time. Here we go. Oops. There we go. Okay, if you have any questions or concerns, my team is on standby. Oops. Black Friday. There you go. If you have any questions or concerns, my team is on standby for support. We're happy to answer any questions that you might have. The email is info@urbanforex.com. Okay. I hope today's webinar was awesome for you guys. I had a great time. I hope you guys had a wonderful time. This whole thing is recorded. You will have the access to this recording within 48 hours. It will be available for you to watch. If you're watching this as a recording, please give it a thumbs up and comment below and let me know how much you like this and if you learned something. So thanks again, guys. It's been wonderful having you guys here as always. Until next time. Cheers, guys. Looking forward to seeing you guys inside the course. Bye for now.